A warm welcome to this enlightening evening to all the market enthusiasts. The main attraction to this webinar is the relevancy to our daily lives, which is financial restrictions and financially adjudicating the values of what we is the relevancy to our daily lives, which is financial restrictions and financially adjudicating the values of what we this event wouldn't have been a bash without the sponsor. A special thanks to our marketing partners, DU Beat, Delhi University Club, IPU Buzz, Media Sprout, Competitions Generator, Assemble, exclusive platform partner, Dare to Compete, financial educational partners, Elearnmarkets, Stockedge, chief education partner, Infigon, platform sponsors for Stock Dominoes, Stock Market Stimulator by Microsoft, Stock Market Research Partner, ticker by Finology, Thinking and Marketing Partner, Thinkerspoint, Creativity Partner, Logosaylove. So, guys, before we start, I would just want to tell you guys that this webinar is going to be really helpful to whoever is present out there. The people who are joining our webinar on the YouTube link would be given a certificate, and there's also a catch in this, guys. You would be given the certificate only when you screenshot the post and post it on our social media, definitely tagging Enactus Gemtech, and putting on two tags, that is hashtag FiFi21 and hashtag FiFi2K21. So, with this, let's start with today. In the era of crypto, knowing and understanding what it exactly is and using it judicially is definitely an issue. So today we have amongst us Ma'am Pulkita Soni. Come and know with from the experienced person, and today we have her. She is a chartered accountant currently working with Deloitte India. She has various degrees, including a diploma in IFRS from ACCA, Equity Research Certificate from NSE Academy, and with an experience of 3.5 years in reporting and accounting profiles, she is definitely going to help you guys today with your financial stability and financial resources. Ma'am, the floor is all yours.
Um, Thank you, Rashri, for the wonderful introduction. First of all, I was thinking to start it with my introduction, but Ashri already has introduced me, so thanks for the introduction. Um, First of all, I'll start the session by understanding that how is your financial knowledge and how much do you know about the financial planning and analysis. So, in a layman terms, that financial planning analysis is nothing but understanding that how money works, why it is important for you, and why you should take care about the financial independence at all. So just give me a minute, I'll share a screen. Okay. So first of all, I'll be asking certain questions, but we can just start with a topic of credit cards, which is it's very important for you all to know how credit card exactly works. Is it a boon or is it a bane? Because a lot of my friends, even a lot of people I have been with, and a lot of students, they don't know about how exactly credit card impacts their credit worthiness, and I mean, why it can be not so beneficial and why it can be a beneficial thing at, I mean, both cases. So I'll start with the credit cards. So today, if you know that there is a 2.4 trillion dollar economy of credit card. And for the long time, the credit card have been marketed as something which you can buy with. So there were a lot of people who were lying with a lot of money idle with them. And there were a lot of people who wanted to have some sort of money or financial guidance. So what happened? In the economic scenario, they both were combined, and that's how credit card was born. And it's nothing but it's not more than just a loan. So credit is a kind of risk, but it comes from a word credere, which means basically trust. So earlier, what banks used to do, they used to give loan on the basis of three perspective. They used to check the capacity of the person, they used to check the capital, and they used to check the character, like how much is the balance sheet and P&L position and how it is. But now, after the computer world, what happened? They have started using a lot of algorithm, and they came up with the um, something called as credit score. So, what exactly is credit score? We all know that we have a lot of institution, like for example in India, it's CIBIL. They gives us our credit scores. It may vary from 300 to 900. So if it is more than 750 or 750, it is considered as good credit score. And if it is less than 650 and equal to 650, it is considered as a bad one. But how it is decided? It is decided on the basis of your credit history. For example, you have taken certain credit card, and you're not paying the installments on time, you're not paying interest, or for example, you have taken a loan from a bank. So that will also is going to impact your credit score. And whenever banks are giving you loan in future, they're going to look into your credit summary. And by using, there is a one catch here, that if you use a lot of credit card, then it can actually improve your credit score. But is it just because of that should we use a lot of credit cards? Let's start. I'll tell you, there are three kind of people who use credit cards. There are transactors, there are revolvers, and there are people with no credit card at all. So people with no credit card at all is really a bliss, but they are not such. I mean, a lot of people are not there who don't use credit cards. So there are transactors. They are basically the people who pay their bills on time, or they don't. I mean, they never pays any kind of interest to banks. Banks generally call them a deadbeat, because what happens, whenever bank is trying to gain certain money from them after the payment is due, they don't really pay any interest because they pay it on time. Although they pay certain credit charges to banks, but more not more than that. But when but they earn from a certain way, which is when you swipe your credit cards. So how it works is, whenever you are swiping your credit card, there are three kind of parties involved. There will be a bank, there will be a merchant banker, and there will be a shopkeeper. So whenever you are swiping a card, whenever you are paying 100 rupees to the shopkeeper with the swiping of that card, you're gonna get 98. That 2 rupees will go to the merchant banker, and bank is also charging from merchant banker of 2 to 3%. So that way, so that's way the banks are earning from your credit card swipes as well. Because of that, because bank earns a lot from the credit cards, what happened a few years back, JP Morgan Bank, they started taking out a card called Black Sapphire, which was very famous, and it was for the premium customers basically, who swiped the cards for lakhs and millions. So what happened, it was very premium card that they started offering, very like a lot of offers, like they have started offering $1,500 if someone is buying them, a lot of trips to Europe, Las Vegas, and different places. So what happened, the JP Morgan went into a loss of around 200 million because of issuing those premium cards. But Jamie Dimon, the CEO, he was very happy about it. He said that I wanted to be $400 million, because it was just a one-time hit for for the people who are actually. It was a one-time hit for the banks. But imagine you are going to live more than 50 to 60 years after that, and in a month you are swiping even once. Like in 12 months, you're going to swipe 12 times, and that's how for 50 to 60 years with each customer, the bank is going to get a lot of money, although it can be 3 to 4%. There was one of the example. I was watching a Netflix series where I saw that a person bought a cup of around 36 million by swiping that credit card. It was an elite cup. So imagine with these kind of clients, how much bank is earning each day and each time whenever you are swiping your credit card. Now, I would like to tell that there are another kind of customers of credit card which are called as the hacker. What they do, they never let bank charge anything from them, not even the credit card charges. They so what they do, they collect all the credit cards, they take all the benefits of credit cards like traveling, that $1,500 money, and they keep swiping between credit cards, but this should not be applied in real life. But these kind of customers are very much, bank is very much irritated with these kind of customers because bank is losing all the time. And the last category is revolvers. Generally, banks love these kind of clients because what revolvers do, they don't pay. They fail to pay their interest. Generally, what people think that, yeah, if I don't pay, it's gonna cost me 2 to 3%, so I'll pay. So, for example, you bought a fridge of around 10,000 by swiping that card. You forgot to pay at the month end whenever your credit card date was due, so you're gonna think that, yeah, I'll gonna pay 2 to 3% next month, and I'll pay end up paying around 10,200 or something. But it's not the case. What will gonna happen? The first of all, the charge is not 2 to 3%. It may vary from 16 to 40%, and that also whenever you miss your deadline. For example, next month you're going to pay around 16,000, and if you don't pay again, then it's gonna be interest on interest. There will be a compounding of interest. So not only on 10,000 but also on 1,600 you're going to pay some money, and that's after the year end you're gonna end up paying more money than the original cost of the asset you bought for. So in a way you in a way the credit card is if it is not used wisely. So I won't say that don't use credit cards at all, but make some rules around using credit cards. Like for example, know your credit score. So right after the session, go to the your website of Sibyl and try checking your credit score. Know your credit card bill due date, because don't pay a single penny to bank whenever your bill is due. Then automate, you can automate your credit card bills because it's very easy to pay with that way. And also know about your minimum balance payment. For some of the people, what happens, minimum balance with the minimum balance pay, they think that, so for example, they have bought something for 10,000, there is a minimum balance pay of 2 to 3% of 1,000 to 2,000. Now they'll think that, yeah, if they pay minimum balance, that means no problem at all. But it's not the case. Even if you pay the minimum balance, the interest will still gonna charge on the remaining amount, and with the compounding of interest. The only bit benefit which minimum balance can give you is you will not be, your credit history will be good, you will not be treated as a defaulter, and you don't have to pay certain other penalties, and your credit card limit will stay intact. So even if so always remember that paying minimum balance is not gonna take you off paying any kind of interest and compound interest. So at the end I would like to tell that any questions from anyone?
Really, your whatever you said till now was critical because we use credit cards on a daily basis. People who are using and they know about what it actually is and how it works, so they generally get into problems. So that was really helpful. I just wanted to ask that uh, about financial planning and whatever you said about the credit cards, there also use a lot of usage of e-commerce such as Paytm, these apps like Paytm and Phone Pay. Could you just tell us that how that works and how are we gonna put in or stable our money there?
Sorry, can you repeat your last line? How?
How are we gonna? stay away from the fraudulence that are happening around those.
Okay, so all these kind of payment gateways, first of all, there is no transaction fees as much as when you use credit card. So I would say that there is not a problem if you use a Paytm or Google Pay while you're paying. It's about taking the loan from the banks. So when in a form of credit card, you generally take a loan from a bank which is on credit. In Paytms and Google, you are paying from your own bank account and money, so it's not a problem. But while using credit cards, you should not pay any interest. That is what I want to convey to you. So we can. Is it fine?
Thank you so much.
You're not audible.
Am I audible now, ma'am?
Yeah, yeah, you're audible now.
Okay, I was saying that thank you so much for your explanation because many people get confused within the terms and they just go on with it. So thank you so much.
Okay. Um, After knowing about the credit cards, let me get into the financial planning and financial independence. So first of all, money is not always about maths. It's not only maths. So whenever you want to know, it involves a psychological as well as social skills. Whenever you want to know why someone took a lot of debt, why someone get into debt in the first place, you will not go ahead and look into the financial histories and everything. You will want to know the greed, the insecurity, the optimism that was there which led that person to get into the debt. So the it's like that when you are planning financially. It's not always like you work hard and you get the money, you become rich with the help of your knowledge and everything. Sometimes it's little bit of luck as well. uh, I'll tell you one story. It's a real life story of Bill Gates. He himself accept this fact. He went to one of the high school in the world that has a computer. So most of the graduate of university did not have computer anywhere near as advanced as Bill Gates had access to when he was in eighth grade. He couldn't get enough of it. So he was 13 years of old in 1968 when his classmate Paul Allen met with him. He was also obsessed with computer. So both of them hit it off. Now, one of the late night sessions, Bill Gates asked Allen what it is like to run a company of 500 million. Then Allen said that I have no idea. Then Bill Gates said that maybe we will run it one day. So in 1968, there were around 303 high school aged people. Among them, 18 million lived in USA, 270,000 lived in Washington, 1 lakh lived in Seattle, and 300 attended that lakeside school. So imagine 303 million out of 300 had the access to the computer. So what if there was not any computer? So it's not always the only with the hard work you can get a lots of money. Hard work plus luck also matters sometime. Now, why financial literacy matters a lot? Okay, I'll tell you just a minute. So, why financial literacy matters a lot? First of all, you should know before going to that point. I would like to tell that what exactly is financial literacy and financial planning you should know about. You should know the difference between the asset and liability. If I tell in layman terms, what is asset? Asset is something which puts money in your pocket, and what is liability? It's something which takes the money out of your pocket. So I have read this book of Rich Dad and Poor Dad, and I've seen that there was a beautiful presentation of a cash flow of poor, middle, and rich, how they manage their money. If we see the cash flows of poor people, what happens? They get a job, they get income, then they spend on all the money in the expenses like taxes, food, rent, clothes, and transportation and fun. Then there is a minimal or no amount to save at all. Then it comes to the middle class people. What is how their cash flow statement looks like is they get the money with only form of their salary. Then they incur some of the liabilities in the form of credit card, consumer loans, and mortgages. They pay them, they buy things out of them, and they pay their for their other expenses, then there is a very less saving, but it's there. But the saving will be in a form of FDRD, which is anyways not gonna give them a lot. If we look at the cash flow statement of a how rich people mind, how a person with a rich mindset works. First of all, their income is there is they have not only one source of income, which is their job. They put their income in different real assets, like for example stock, bond, notes, real estate, intellectual property, and etc. So they get the money out of their assets, so they get dividend, interest, rental income, royalties, and their salary. So their income are enough to compensate for the expenses they are incurring, and they are living with pure free salary. So that's how we should also think, like, and it's not impossible to think like that. i'll tell you a story I'll tell you this with an example of a story. There was a couple, two people. They were earning separately of around, let's assume, 10 lakh and 10 lakh. They started to live together. Now their income doubled to 20. Now they decided that they should live in a home. So they took a home loan of some amount around, like, for example, they were making it a good home. So 30 lakhs maybe. Then what they did, they wanted to put some appliances in their home as well, like fridge, TV, cooler, bed, everything. For that, they have used their credit cards. And then, with the help of the banks, they have converted their credit card loans into the mortgages. That means they have put their house, whichever they have taken on loan, on mortgage to pay their credit card balances. And that's how what happened then. Their loan term stretched for 30 years. Now, continuously for 30 years, what are they doing? They are paying loan amount as well as the mortgage amount of their credit card, and they are keep paying because their salary is not enough to pay it off in one go. So now they are going to continue work for 30 years. So do you really think yourself like that? It was the old age when people used to do that. They will live their whole life paying the debt, paying the loan. But if we have options now, why we should do the same? If we talk about buying a house, people think that buying a house is really an asset. In earlier time, when there was not a stock market, there is no cryptocurrencies, there is no Bitcoin, there was no real estate. Real estate was there, but people used to think that buying a home, buying gold, buying silver, these all are assets. But now, buying a home at least is not a pretty much of an asset, because I'll tell you why. For example, you are buying a home and you are taking the home loan for that, and you are paying that money. You are earning 50K, you are paying around some more or less the same amount for the home loan, and you are saving a little bit. Imagine, instead of paying that home loan amount every month, you are investing that in real estate, stock, bonds. And you know what, in real estate you really don't buy the, and you will say that house also we are buying and real estate we are buying. No, in real estate you just have to be owner on paper. For that, it's some sort of seed money which you give, and after that you can sell the property to some other person on paper. You can earn a lot of commissions on that. So it's not like you are really buying the whole property. So if you have invested that 50K in all these assets, and mutual funds, they give like around 10 to 12% of the returns. Bitcoins, for example, not only Bitcoins, different other cryptocurrencies, they actually give a lot of returns within a month. And stocks, IPOs, of course, they also, if IPO is successful, then of course it's going to give you a lot of money. So instead of that, every month for in a year, you can make that 50K to at least 80K. That is for sure. So there are two scenarios. One is where you are paying 50K and getting nothing. There is another scenario where you are getting 30K over and above of whatever you are getting. So of course the second scenario will look good if it's just that a matter of some getting some knowledge and investing your money wisely. Uh, so any questions till now?
whoever watching Finance Fiesta, please guys, go and ask questions. Ma'am, my question to you would be, I live in a hostel and I have been getting a monthly amount for my take cares or for everything that I go through.
Okay.
So, so if I want to start investing somewhere so that I get proper returns in order to also save money and get some extra kind of pocket money. So, what would your suggestions be about that?
Okay, so you're saying that you have a little income to save. That's what you're asking, right?
Yes, yes, yes.
Okay. Okay, see, so as I suggested you, in that case, you have, see, the conventional ways making the RDs and FDs in bank, or the modern way is that I would not say the jump to the investing in stocks and IPOs and all that. You can start with the safe investment at first, but never stick to the safe investment all the time. You can start with mutual funds, for example. Like you can there are some different limits, like for example, I think ICICI, there is a 500 rupees limit. There are a lot of mutual funds which starts with 500. So you can, per month, you can start with either SIP or you can start with lump sum. If you are a taxable person, then I will suggest for the SIP for 3 years, and if the tax is not applicable, then there is no problem at all. You know what? There are mutual funds for even 7 days. There are mutual funds even for a day. So if you wanna go slow at the beginning, you can start with them, or you can yeah, there are some other assets, there are some other ways as well, like I'll tell that, where there your presence is not required, like certain royalties and patents and everything. Like if you are a singer, you are a painter, you can actually put your assets on any website or anywhere, and you have to just put a simple investment. You can take the royalties and patents of that, like it's just an initial thing I'm telling. So that would be my suggestion to for the starters.
Ma'am, thank you.
Okay.
Guys from Finance watching, please ask your questions. Ma'am is really helpful because I sincerely cannot manage my budget and my expenses all at once. I want to save money, and that's what basically I always think of. And I had a friend who is investing in stocks and stuff. So every time he puts his money somewhere, he doesn't understand what exactly is going on. And he thinks he's very confident about where he's investing. But somewhere, due to the changing market values, because there's always a bullish phase, there's a bear phase. So during that time, there's a lot of confusion. So I guess our audience would want to know about it, that what is the very correct time to invest and where to invest and how to monitor the stocks, maybe.
Yeah. Okay. So see, there is not at all a right time when to invest. Every time is, I would say, a right time. You can start from now, but there are some market times under which you are supposed to invest. Uh, if you really wanna know that how stocks works, so, and I mean where you should exactly invest. First of all, I would say that there are certain tips which I can give. I mean, there is not a short way of doing that, but you can start with maybe following, for example, you can follow certain industries. Like I'll give you an example. For example, steel industry. uh, so you should know the news about is it going to be increase. So there are two things. One is the macro analysis, then there is a micro analysis. First of all, you analyze the industry, you see the growth prospects. Like steel industry, they are going to be pretty much good growth. Like in the starting of the COVID, people thought that the pharma industry is going to do better. After the industry analysis, you get into the particular companies and how you analyze the companies. There are different apps like Screener app and Screener website or Rediff, where you can, or there are different apps like FinShots which give you the updated news. You can go and compare the different kind of ratios. You can first of all start improving your knowledge, financial knowledge, by reading little bit of books. Like I give you example of Rich Dad Poor Dad, Think and Grow Rich, and the Peter Lynch book of investing. There are a lot of books of how you exactly analyze. I can give you an example. Like for example, you are analyzing a bank stock. Then how would you determine that where which bank you should invest? You know that it's gonna take a boom after some period. So what you do, you compare, you take two three banks, you see their delinquency ratio, which is nothing but the NPA, how much is NPA the bank is having. Sometimes their PE ratios, you see their assets, you see their liabilities, you see their just so the screener app, an example I'm giving you, it's gonna give you the comparison of how it is performing against its competitors. So that way you can actually, but you need to read something. First of all, you need to understand what is PE ratio. Then only you will be able to compare that PE ratio with industry and the peer comparison. Then you can read a lot of, so there are annual reports, there are different news, there is a different section in the every company's website which is the investors guideline. You can go there and get into and check what is going on with this company. So you have to grill, and that's for the higher level I'm telling. You have to grill after doing industry analysis, check, take the companies, start watching their how market is trading every day. You can make a account on rediff.com or sort of these sites, and you can keep checking that how the trend is going on. So that's how you should study and uh, should invest. That's what my suggestion is.
Thank you so much.
Okay.
And also, would you like passive income? Because most passive income, but we have no idea about what it is. So if you could enlighten that particular topic, that would be really helpful.
Okay, you said passive income, right?
Passive income.
Okay, so that is what I'm talking about since quite a long time. That active income is nothing but the salary. The passive income is the which you earn from your salary. Like I told you in the previous example, the dividends, the income, the royalties, the patents. This is nothing but a passive income where you are not exactly doing something for that. The money is making by itself when you are sleeping, when you are eating, when you are working something else. So that is what the passive income is. We'll come into that more when I talk about the next thing. When you are, see, when you are working in as a only relying on the your salary, what exactly you're doing, you are helping a lot of people, you are doing a social service in a way. You are helping a bank where because you are investing your money in a form of RDs and FDs. Bank is not keeping your money as it is. They are churning it. They are issuing a lot of CDS. They are giving guarantees. They are putting money in the options, derivatives, commodities with your money, and they are making. Do you know that banks even invest for a day? Like that's how a treasury things in treasury happen. They even manage whatever the cash they are having for a day in different stocks, mutual funds, and they earn something out of that even for a day because they have to keep liquid assets. So when you are keeping your money in FD, you are simply giving your money to banks. You can take that and you can invest somewhere. You can yourself earn the money rather than banks letting banks to make money. Second, you are working for the government. You are paying taxes to government. Government is very happy. You are working for the owners. You are helping in their progress because they are gonna, if for example you are working for a company, the CEO will be very happy that you are working for that person. So it's not like everyone should be entrepreneur, but start minding your own business. That means start thinking about yourself as well. So having only one sort of income, that means just above you are getting broke. So don't do that. Sorry. So I'll tell what are the real assets, as I gave some of the examples before. Business that do not require your presence. It can be stocks, it can be bonds, it can be mutual funds, it can be income generating real assets, estate, it can be notes, it can be royalties from intellectual property like scripts, music, patent, and anything else that appreciates in the value in the market, like gold, also like gold bonds of the government sometimes, and silver. They also, like, you can invest, you know that the gold is going to get up, you can sell and you can have your money. uh, Also, I'll tell the in terms of tax planning how rich exactly. Sometimes there is one of the way you might have heard about Dhirubhai Ambani a lot. The whole tax system is built because of a lot of things which Dhirubhai did. So one of the example I can give you is how riches saves their money. What they do, you know that while as a person you are expending a lot of money, you are going to a hotel, you are attending parties, you are doing going for a trip or everything. So if it's your personal income, there is not going to be any deduction in tax for that. But if you make a rich person, he or she makes a company, and they put all of the expenses in a form of, there are certain rules, but there are always certain loopholes. They will put all these expenses at the corporate expenses, employees expenses, and they'll get a deduction for the company for that. So this is one of the thing. There are a lot of things which rich people do for that. Rich people means rich minded people do. So, for example, rich with corporations, they earn, spend, and they pay taxes. And so people who work for the corporates, they earn, they pay taxes, and they spend. So they are giving money to themselves at the end, which is like, so what they do, they get the money. They first of all they pay to all the bills, they pay taxes. At the end, whatever is left, they invest. And how the other mindset work is, they get everything, they pay to the creditors and banks and tax at the end. They first invest it and make money out of it. I'll give you one example. This is a real life case. A student, he or she got a loan of around 13 to 14 lakh, and he got a job. Then he was in a dilemma. He came to me, he said that, what I'll do, I'll pay 50,000 every month. That's how I'll just get rid of the loan as soon as possible. And it was a student loan, there was not any interest on that. So as a wise person, I would say, don't do that. You can, for a year, you can instead invest that money, because there is no interest at all. And whatever earnings you are getting out of that money, you can pay your interest. Just, I'm not saying no, don't pay at all, because future is uncertain. But don't pay 50K for the loan, like outrightly. Just make some adjustments, pay a little bit, and then after year starts for the interest, then you can start paying more. Okay, so financial intelligence is made up of four main technical skills, which is financial literacy, that is ability to read numbers. It should be there with everyone. You should know how to read numbers, because that's how you will gonna do your analysis of the stocks and mutual funds. Then there is a investment strategies, the science of money making, how exactly, like I told you in credit cards, how compounding of interest works, and it's gonna cost you a lot. The market supply and demand, you should know that. For example, like we see in the COVID, I have to take that example only. Like we see in COVID, the cost of mask, I have bought a mask for 500 rupees, and it was of rupees 10 one day, because I had to travel. So because of there was a lot of demand, the prices of mask shoots up like anything, and people were selling the mask and sanitizer for any cost which they can offer. So you should understand the demand and supply for while you are investing as well. For example, there is a, you know that there is some place where the properties pricing are going to go up. So you can become a real estate, I mean, you can buy some sort of properties on paper, and you know that the price is going to go up. You can start selling the paper ownership later. And also be always aware of the law. It can be a corporate law, it can be a tax law. So don't rely always on your financial planners and CAs and all the people. Then you can yourself manage your money. Tax laws are made by a human being only. You should think like them, that what you will do to escape. So things like that. Okay. So at the end, I will tell, before moving to our next topic, I will tell that you should know as a smart investor three things. One is how to find an opportunity that everyone has missed. We have a lot of examples in the form of startups. We know that there are a lot of startups which are there and which were invented because someone did not notice. How to raise money, it is not always a bank. It's not necessary that you always go to bank and ask for money. There are a lot of sources with which you can actually raise money. how to organize smart people. You might have seen that intelligent people, I would say, what they do. If they feel that they are not intelligent enough, they hire someone to do their work. So that's how organizing works. For example, we see a lot of collaborators. For example, a person who doesn't know how to paint. So what he can be a collaborator. He will hire a lot of painters for him or her. He's gonna collect their paintings. He's gonna put on his website. He's gonna earn some commission out of it. So even though he doesn't know how to make paintings, but still he's earning after making paintings. Don't work for money, I would say. If you are working to learn, then it's good. But if you are working just for the money, then it's not good for your future. Workers work hard enough not to get fired, and owners pay just enough so that workers won't quit. Even after becoming financially literate, people tend to struggle. So this is the last thing I want to tell in terms of financial literacy, that there are a lot of people who know about money, who know about how money works and what is financial literacy and all of that, but there are certain reasons for which they are still not doing anything about it. There are fear of losing money. It's there with everyone. See, first of all, mistakes are part of life. If you don't make mistake, you are never gonna learn anything. If you invest five to 10,000 today and see it growing after some of the months, rather than you investing after your 30s, after your 40s, and then you see losing money, which one is better? Of course, losing now. Then there is a laziness, of course. Because of laziness, people don't even try to understand that how the balance. I think a lot of people just don't even open the annual reports of companies to see that how their financials are. See, if you are making the uncalculated risk and you are taking uncalculated risk and making uncalculated decisions, then that risk is not worth it. Always do your prep work. Then the habits, our lives are a reflection of our habits more than our education. So pay the, this habit of paying your bills first, start looking at that seriously. And the arrogance, which is ignorance plus ego. People think that I know good enough, they will not learn anything from anyone, because of their ego and everything. So this is all are the reasons that even the financially literate people also don't think about money that seriously. So you'll see a lot of, even a lot of doctors, lawyers, engineers, they earn pretty well, but because of this lack of understanding, they start losing money. In the world of accounting, there are three types of incomes: earned income, passive income, and portfolio income. Earned income is what you earn from your salary. Passive income is like real estate and gold and jewelry. And there is a portfolio income, which is like paper assets, stocks, and bonds. So this was about financial independence. Now I'll get into the next topic of how tax works, and it's gonna help you. I'll explain the taxation under new regime and old regime. So any questions before that?
So there are a few questions. I just want to ask. First, I kind of missed that from the previous one only. So are there any other ways from which we can get to know or generate our credit score? Like you talked about credit cards a lot. So other than that, are there any sources through which we can generate? Because for example, for it might be possible, as you will go into taxation, you might discuss it, that we can't really file a tax until a certain amount, right? And after that we should file a tax. So like how can we generate a credit score before filing a tax? Something about that.
Okay. So first of all, the credit score and tax returns, there is no connection. I mean, there is very less connection. So your credit score is useful when you are going to a bank and asking for a loan, or like any kind of your credit worthiness is measured, and that point of time your credit score helps. But when filing the tax returns and this all, it's not really important. But to you're saying that to you want to know that how to improve your credit score. So yeah, using a credit card is gonna improve your credit score. Apart from that, if you are paying the bills on time, I mean, as I told you, you have taken a loan from a bank and you are paying it on time without being a defaulter, without falling into the NPA. That's the another source with which you can have your credit score proper better. And that's how I think that's the one example which I know.
Okay, someone on YouTube wanted to ask. Firstly, they asked, someone asked how to invest in private companies. In bracket, they've written private equity.
Okay. How to for investing a private equity? First of all, it's not an IPO, so not everybody like the general public will not be investing in them. But yeah, there are some options like for the directors and which are there are certain FIIs and all that. For them, there is a open place for them to invest in the private investments, but a general public cannot. I mean, you will get notifications and you can go to the company's website and annual reports and all the in annual reports they declare that they're going to come up with the private placements and everything, so that's how you can know about it is coming. But it's not open for the general public.
Okay. The last question someone asked is how to learn numbers in terms of financial literacy. What are the essentials?
How to learn about the numbers?
Yep.
Okay. So I am assuming that numbers you mean the balance sheets and P&L and reading the annual reports and this all these kind of ratios. So I would suggest that first of all it's not very hard, and you can start with the understanding the annual reports. That's the first step. For example, you can take a I'll take example like Jindal Sauce team. You can take out the let's take the example of Reliance or HDFC or anyone. They are very big and you won't generally start investing in them, so you can start with small companies as well. Take out the annual report and you can look into the balance sheet. And just if you are not from if you are from finance background, then you will know the layman terms that what and all this means. Then there are the financial figures, and out of that you take out the information which I told you, that like screener and different apps which are there, which gives you the insight of that what does it mean exactly. When I'm saying the PE ratio, what does it mean exactly? It's like the price per earning ratio. So like that. So first of all, understanding the balance sheet and P&L, you can actually read different books and YouTube videos are available for understanding the balance sheet numbers. Then there are a lot of ratios out of that figures and numbers which you can always go for different again I'll go that you can take some courses like NSC. They held a lot of courses where you can learn about it. You can talk to your any friend who is into the finance background. They can easily tell you that in layman terms that that's how it is. And reading helps a lot all the time. You can always Google and check it out that what does it mean. But you can start with annual reports. That's what I suggest.
Okay, I think these are for now.
Okay, so I'll quickly go to the tax forms and rates. I'll go with the form one because I assume that a lot of people will be salaried people, because the students are generally going into the salaried. So there are different forms which are given by tax departments, and they are used from different perspectives. So ITR form one, as you can see on screen, it is used. It is known as Sahaj. It is used. These are filed by the person who earn income through salary and pension, who earn through house property, who do not earn capital gain, who did not hold the property abroad, who earn only domestic income. Agriculture income is less than 5,000. They earn income through investment like fixed deposits. They do not earn any windfall income through the house racing or lotteries. So I'll tell you now how exactly. Can you see my screen?
Yes, now we can.
Okay, so I have taken out one of the example of a salary with old tax regime and new tax regime. So I'm gonna quickly run through it, and it's gonna help you to know understand that which one you should opt for maybe. and how exactly you claim for deduction and what happens if you don't claim for any deductions. So, for example, that's how your company salary slip looks like. It's gonna give you basic HRA and total gross. For example, you're earning 10 lakhs, so you don't have to do anything in this. It's gonna give you the total. Then there'll be always, if you are opting for the old regime, then there's going to be a standard deduction of 50K. I mean, you won't pay tax on 50K income. It's gonna reduce from your income. There is a reduction of professional tax. So in the old regime, it will gonna deduct. Then there is a salary income after I reduce all these two. Then whenever you will join a company in future, you're gonna hear a lot about ATC. So ATC is nothing but the kind of deductions which we get. I'll go to the ATC. I'll not get into the detail, but to give a summarized view of how this is ATC is. So if you are investing in the mutual funds, which will call ELSS, equity linked in the securities. So there is a return of 12 to 15%. You get a lot of return, but there is a lock-in period of 3 years. That means after 3 years you can withdraw money. Then the tax will be relieved. Then there is a NPS on which return is 8 to 10%, and I mean, you get it if you take it after retirement, then it's beneficial in tax perspective. There is NPS, SSCC, just like that, PPF and NSC ULIP. Then there is a FD. Then there are certain yojanas. So these are nothing but the ATC, and that's how there is a limit of deductions of 1.5, and also there is over and above of 50K. That I'll get into. But if you see, the PF reduction will given to you automatically because company is paying your PF. That way you will be getting after, if you don't claim any deduction apart from PF, you will end up having this much income. Then there is a HRA and LTA, you haven't claimed for that as well. Then you will end up showing this income. Then there is going to be a tax. So as per old tax regime, for until 2.5 there is going to be zero tax. For next 2.5 there is a 5% tax. For next 5 lakh there is 20% tax, and more than 10 there is going to be 30%. So I have calculated the tax like that, and you will end up paying total tax of this much. But that's how you don't pay it in a one straightforward. It's gonna divide by 12, and that's how you're gonna pay. I have divided by 11 because I have taken 11 months income. So yeah, that's how you're gonna pay end up paying every month. But if you take certain deductions, for example, I have, apart from these, I have included some deductions like 80C. I told you there is a total limit of 2 lakh of 80 CCE which you can take, like 50 of NPS, which is over and above of 1.5, and 1.5 of this. That's how you can get a total deduction. See, the income is how much reduced. Now it's 7. Now you have taken HRA. So HRA also, there is a rule for HRA. Is that how much deduction you get? Actual paid amount or actual rent minus 10% of your basic income, 50% of basic plus DA. Whichever is lower, that's how you're gonna get your HRA deduction. Then there is a now your income will come after deduction under section 10. Then you'll get a tax on total income, and again the surcharge is above 50 lakhs income, so it won't be applicable. And educess is 4%, 3 plus 1, so it's gonna be there. Then total tax is again 57, then you end up paying 5. So if you see that when you have opted for certain deductions, that means you have invested your money somewhere, you are not paying more tax, you are paying only 5. This is the new tax regime. Again, there are the what is the change exactly? See, you won't get any of these deductions. You won't get this standard deduction and this deduction in your new tax regime. So if I don't claim for anything, the rates are for 2.5 it's 0. Next 2.5 is 5%. Next 2.5 10%. Next 2.5 15, then 20, then 25, then 30. So you will end up, see, if you see, even I have not claimed any deduction, I'm paying 6,000 per month, and here it is 9,000. So it is, anyway, this one is beneficial for someone if they are not doing any investments. But if they go for, there is a deduction of NPS at least in new regime, so you will end up paying 5. So that's how the tax works. Like, for the layman, you can dig down and explore more for which one you should adopt and how you should do. But that's what it is about. And also you can make your portfolio whenever you start earning. You can say that, like, for example, I'm getting 50,000 right now, so I can invest in overdraft. If I have overdraft, I'm gonna pay that. I can invest in mutual fund. I can invest in access, PPF, other investments, RD, shares, and expenses. Then this is balance. So always try to make such kind of portfolios. It is very layman and it is very simple, but you can keep exploring and getting into the detail. So that is what is all about.
Thank you so much, Pulkita ma'am. This session was very helpful, and I guess our audience enjoyed it a lot because being financially independent is and having a literacy about what finance is all about is actually really essential during this time, and especially post COVID. So it was a really good experience with you. Thank you so much, Pulkita ma'am.
Yeah, welcome.
And now, without any further ado, you guys see the beautiful posters that are being put up. I would like to thank each and every sponsor, and also to put your views and your light to the few sponsors that have helped a lot. We'll go with Logosaylove. Logosaylove is a brand founded by an outstanding graphic designer. Guys, am I audible?
Yeah, you are audible.
Okay, thank you. Logo Se Love is the official creative partner of Finance Fiesta 2021. It is a brand founded by an outstanding graphic designer, hustler in the world of rising brands and visionary entrepreneur Chirag Puri. We have another we have another financial educational partner for Finance Fiesta 2001. It's My Stock Edge. Stock Edge is India's best and the fastest growing equity markets analytics and research platform, primarily based on NSE and BSE data. It helps the young population to learn about various facets of equity markets through the learn section, and at the same time analyze the market situation. Next we have Elearnmarkets. Elearnmarkets is the financial educational partner of Finance Fiesta 2001. Elearnmarkets is an online portal which is created to spread financial market knowledge among students, investors, and traders alike. This is a unique platform where you can understand about the financial facets of the markets and the well-being. And our another partner, the thinking and marketing partner for Finance Fiesta 2021, is the Thinkerspoint. Thinkerspoint helps you accelerate your professional journey by creating your portfolio on their website and showcasing your work experience, skills, and talents on which Google, which is actually a really good marketing experience for the people who are wanting some who want their exposure in the financial market. This event, Financial Fiesta, has been possible and has been a great bash because of these sponsors. And I would like to thank these sponsors. Thank you so much, everyone. Thank you, Pulkita ma'am, for sparing your time and giving us some valuable suggestions and some valuable information regarding what our financial condition from at least 20 to 30 years would be and how we want it to be. Thank you so much, ma'am. I would
Welcome.
want Abhay Chopra, the president of ENACTUS, to say a few words.
Yep. Thank you, Rashi. Thank you so much, Pulkita, for being here and guiding everyone. And thank you so much for all the sponsors and especially Thinkers Point to making this happen in a very short time and making this at a grand scale. So, just one last question someone did ask. I just didn't wanted to miss that as well. So, Pulkita, someone asked, how can we invest in shares of foreign companies like Tesla?
Okay. Um,
And one more question from
if
my side, can even they do it? Because I'm not sure if the Indian law allows it or not.
Yeah, even I think they can, because I have been investing with Indian companies, but foreign companies, even I have to look and check. So yeah, even I think I'm not sure, but I think we can. There are certain rules and regulations and restrictions in place. Uh, we can invest with the form of bitcoins and cryptos, as you see that this is going a lot in with Tesla. But as far as stocks and shares are concerned, I think we cannot, because they should be listed in the BSC and NSC stock exchanges.
Perfect. If you would allow, I would just like to answer this personally as well.
Yeah, yeah, sure.
Sure. So I do invest in international stocks. So it totally depends. Not at all any promotion, not at all any sponsors. Just wanted to pour it out my knowledge as well. So Chirag even said that we can use IND money. So that's one thing. And the second is vested. So vested is kind of a very little startup. Not at all again promotional. Just wanted to pour my personal thing, like how do I do it. So yeah, I'm not sure about the taxation because I do not come in the tax lab for now. But if someone comes up again, I'm not sure. So we have to check it out for the taxation. Yeah, I think thanks a lot, Pulkita. Thanks a lot, everyone, for coming out, attending this session. Thanks, Rashi, for hosting it up, and thanks everyone for being here. I hope you had a great time and learned a lot. And thank you again. Thanks a lot to all the sponsors and Thinkerspoint for making this happen.
Thank you. Bye.
Thank you, everyone.
Oh no,
Abhay bhaiya.
done.